Star stock picker Cathie Wood of ARK Invest cautioned that a slowdown in China's economy might have an impact on commodity prices and growth throughout the world economy. Wood has become the public face of a tech-driven bull market on steroids in less than 10 years. She was a supporter of actively managed exchange-traded funds, a class of investment that combines stock selection typically associated with mutual funds with the ease and tax advantages of ETFs. The assets in ARK's whole collection of ETFs reached a value of $61 billion at its height in February of last year, making her the most known and closely watched female investor in the world. Her large, focused bets on disruptive innovation, borderline absurd predictions on everything from shares in electric automaker Tesla to the price of Bitcoin, and her wise use of social media all contributed to this success. Although the S&P 500 is currently at record highs after ending a record-breaking year, no other market areas were as fortunate. For instance, renowned investor Cathie Wood's ARK Invest performed poorly last year. Her ARK Innovation ETF, which owns shares of companies like Palantir and Zoom Video, experienced a 24% decline in 2021. The ARK ETF may have underperformed in 2017, but it has produced more significant results over the longer term. For instance, the S&P 500 has increased by 89% over the past 3 years, while the ETF has increased by 138%. One of the world's most well-known and widely watched investors, Cathie Wood, announced that her fund had drastically reduced its exposure to China, leaving only a portfolio of firms that were clearly currying favor with Beijing. She told an audience of institutional fund managers that ARK's abrupt strategy change was necessary because the climate in China was very different from the one many global asset managers had invested heavily in last year. She claimed that the Chinese authorities were now emphasizing social issues and social engineering more than economic markets. Anything Beijing perceived to be overly lucrative was subject to torpedoing. A slew of mind-numbing regulatory changes that the Chinese government put on the nation's online education sector throughout a single weekend in July last year was highlighted by the creator of ARK as the cause. That action, in her opinion, indicated that the government's pursuit of shared prosperity had taken precedence. The education directives practically eliminated the country's multi-billion-dollar listed tutoring industry overnight, which forbade for-profit businesses from teaching school subjects. The actions are a part of a more extensive campaign against the gaming, entertainment, and technology industries. China's two largest online gaming companies, Tencent and NetEase, saw their shares fall substantially as the Hang Seng Tech Index lost 4.7%. This was in response to authorities ordering the companies to break from the sole goal of pursuing profit. We have not eliminated our positions, but we have reduced our positioning in China dramatically, and we swapped some of our holders, which became losers, into companies that we know are courting the government with common prosperity, said Wood. JD Logistics was one of the firms in ARK's newly unified China portfolio battling for the government's favor. According to Wood, JD Logistics was constructing infrastructure in third- and fourth-tier cities at incredibly low gross margins. Wood also mentioned the e-commerce site Pinduoduo, which she claimed was making significant investments in the food industry and supply chains between farms and retailers. She remarked, "I think it's basically investing for free to help the government," adding that some businesses seem to be currying the government's favor. Wood's remarks, which she delivered at a Mizuho Securities investor conference, were made during a discussion among international investors about whether Chinese President Xi Jinping was effectively making specific equities markets in the second-largest economy in the world uninvestable due to the unknown regulatory risk looming over them. Chinese companies listed on U.S. stock markets have been particularly hard hit by Beijing's recent interventions, including tutoring businesses and ride-hailing group Didi Chuxing, whose shares fell after regulators opened an inquiry into its data security shortly after its New York initial public offering. In contrast to ARK's recent portfolio reorganization, Wood asserted that she believed China was undertaking a reset rather than trying to cut itself off from the rest of the world or stop developing. She added that we don't plan to give up on China because of its commitment to innovation and intrinsic entrepreneurial spirit, and we believe that some of these restrictions will be revised over time. That concludes today's video. Thank you for watching this video all the way through. Please don't forget to subscribe to our channel to see more educational videos like this and to leave likes and comments. We'll see you in the next one. Goodbye.